Alright, what's up guys? Sunday afternoon, so we're going to jump into the weekly Watchlist video here for the week of October 3rd, my birthday month. So this morning I went live with the good people in the Mastery group as always, and we did our weekend prep and we put together the scorecard for the week ahead. So guys, here's where we're at. It's basically bounce or die. Like everything from the monthly charts to the weekly charts to the big three indicator, the dollar, the volatility index, everything right now points towards, this market's going to trade much, much lower. So basically, if the bulls can't find some kind of Hail Mary, and here's the thing, like any rally, I think it's going to be short-lived. So I guess the question is, this week, does the market just continue to roll over and die from here? I think that's the most likely outcome, based on the things we're going to cover. Is there the chance the bulls get a little something going, maybe a 2 to 3 day rally? But that's the thing. I don't think, for now at least, I don't think any pop here on the market, even if there's a short-term narrative change. I don't think that pop is going to last. So, not to be biased, I never marry an idea, and obviously if the market flips bullish this week, we gon' be getting long. But for now, guys, from the top down, the list of problems is a long one. So I'm fully expecting more downside. In the event we rally, you won't hear me complain because I want to get more shorts on. The difficulty where the market is right now is shitty as things look. It's just not the best spot to load up the boat on shorts, being we're a wee bit oversold. So if we do bounce, I'll be looking for more shorts in names like Apple and Tesla. But based on everything we're going to cover here, the path of least resistance is incredibly to the downside. So the scorecard, points for the bears and points for the bulls, right, is a bit of a teaser here. The bulls don't have any points. Yeah, the market's a little bit oversold. I don't think that's enough to justify looking to get long. Way too many problems. So points for the bears here. We've got the monthly squeeze in the S&Ps, which for now looks bearish. We got the weekly squeeze, of course, that's bearish. We've got close to a full stack of sell signals on the big three indicator. You're getting your leadership breaking down. Your Apples, your Teslas, your Amazons. The dollar is still bullish above the daily 21 EMA. HYG is busted. And the volatility index is above 30. Until these things begin to change, we want to expect any bounce in the market going to be a short-lived one. So as far as the problems here for the S&Ps, all really straightforward stuff, guys. And, the most important thing is my whole outlook on the market right now, like the whole thought process that we're going to continue to trade lower. Nothing to do with the Fed, right? Nothing to do with the economics of it. Everything to do with the trend and the structure. So, problems on the monthly chart. We got a big monthly squeeze, and obviously a monthly squeeze when it fires can pack quite the punch. So big buildup of energy here on the monthly chart. And as far as the squeeze goes, there's a much greater probability that squeeze fires short when you're under the 21 EMA with a negative histogram. So now your S&Ps have been under the monthly 21 for 4 months in a row. And we have the first negative histogram since 2008. Right, that's pretty crazy. This monthly trend, since we bottomed back here in 2009, momentum has never gone bearish. Right? Even during 2011, even during COVID, you never flipped that histogram to the downside. So that's a big change and potentially a big problem. Right? The squeeze is a buildup of energy, and the rule of thumb is once the squeeze fires, you get your first green dot. We're going to typically look for anywhere from 8 to 10 bars of momentum in that direction. So a good example is back here, post-COVID. That monthly squeeze fired to the upside. And after you got your first green dot, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months of nothing but non-stop momentum. So of course there's the implications. Under that 21 EMA, first negative histogram since the financial crisis, if that squeeze fires short, there is the potential for 8 to 10 bars of momentum lower on a monthly chart. So the way I see it is to cancel out the odds of that squeeze firing short, The bulls have got to get the S&Ps all the way back above that monthly 21 EMA, and they got to keep it there. So now we're talking a move back to like 42, 4,300. I don't think it's going to happen. Could happen. But for now, guys, that monthly squeeze leaning in the favor of the bears, and pretty big implications with that. Then we take it down a notch here to the weekly chart. And remember, last time a weekly squeeze fired short, the SPX pulled back by a good 500 or 600 bucks. 500 or 600 bucks from here will take us to my ultimate target of about 3K. Right, a move down to 3K will pretty much wipe away that whole COVID rally. But the same rules apply here. Squeezing under that 21 EMA with a negative histogram. And that squeeze hasn't even fired short yet. When it fires short, like any other squeeze, there's a potential for 8 to 10 weeks of momentum. What I would think is you fire a weekly squeeze short, you're probably going to start to trigger that monthly squeeze to fire short as well. So, problems on top of problems. They don't fix this problem unless they get the S&Ps back above the monthly 21. I think a bit of a tall task here to look for a move back towards 4,300. Always possible, I think a little bit unlikely. So, like I said, Federal Reserve aside, the economics aside, I think for a lot of us, a language we all speak, a squeeze under the 21 with a negative histogram is a squeeze with a pretty good chance of firing to the downside. So until that changes, and remember, a little bounce here, even a rally back to like 3,900 doesn't necessarily fix the structure of those problems. Very important stuff here, guys. Moving on to the dollar. All right, simple correlation here. Strength in the dollar, weakness in the equities market. So you'll notice last week, first flush in a while. We got the first flush here in the dollar in quite a while. Now the problem is the market didn't do too much with that pullback in the dollar. Right? Obviously the S&Ps and the QQQ, they didn't do themselves any favors last week. So we're looking at the dollar now. The problem remains that this trend is just really, really freaking bullish. So I'm thinking that might be all she wrote as far as the dip here in the dollar. Where now if the dollar just hangs out at that 21 EMA and then eventually you get continuation of that trend back towards the highs, it's going to send the market much, much lower. So we'll see what's up here this week. Of course, it could trade lower, and I suppose that would be good for the market. But as far as the quality of this trend, until we get rid of that daily buy signal with my big 3 indicator, the expectation should be this continues to trend higher. Right? That means we're going to make these big pushes. We're eventually going to pull back towards that 21 EMA, chop around for a little bit, then you make your next leg to the upside. So throughout October, November, December, if that's the continued pattern here for the dollar, pull back, find support, make a brand new high, pull back, find support, make a brand new high, we have to expect the market just continues to trend lower and lower. So for now, the dollar remains on steroids. And then HYG, this pretty much, I think, is showing you where the market's going to go. So before the market took out the lows on Friday, HYG here takes out the lows, and it's a total mess, guys. Sell signals on the big 3 indicator on the daily 4-hour, 2-hour, and the 5-minute. So I think as long as HYG is under 73, 73 being previous support, we got some problems here. So the whole goal of today's video, isn't to create a narrative that supports my trades. Right? I'm short Tesla and I'm short Snowflake. I'm trying to show you all the reasons that point towards we're going to continue to see the market trade lower. And the beauty of that is if these things change, right, if you're mindful of these things and they change, then you have a sense of we might be getting ready for a reversal. The absence of these things changing, the odds of a reversal, pretty damn slim. So HYG under 73. We continue the market to trade lower. The dollar above that 21 EMA. Continue to think the S&Ps and the Qs trade lower. And then the volatility index above 30 in the short term, looking for the market to trade lower. So in other words, imagine tomorrow morning, the S&Ps are up 1 or 2%. All right, we get a big gap to the open, all kinds of fireworks. Don't trust that gap up. right? Don't trust that strength. If the VIX is still above 30, and remember, we got a few pops this week. I think it was Tuesday. The S&Ps and the Qs finished the day up about 2%, but it totally failed. And of course, regardless of a pop in the market, VIX never closes under 30, HYG never closed above 73, and the doll hair never closed under that 21 EMA. So all things to be mindful of, guys, but for now, all things that point towards we're going to keep on selling off here. Then the next problem is the leadership is starting to break down. Right? None more important than Apple. Remember earlier, was it Tuesday, Wednesday? I'm trying to think. It doesn't matter. A couple of videos ago, the title of the video was something like, the chart of Apple is a huge problem for the market. Keep in mind, that's because of the weighting. Apple makes up like 15-20% of XLK. It's a huge chunk of QQQ, and it's a big chunk of the S&Ps. So even though the S&Ps and the Qs are breaking down to new lows, Apple still has another $10 until it's testing the June low. That's like 6 or 7% downside. And at this point, guys, the structure it's pretty bombed out. Right? The level I gave you was 150, and I told you under 150 there's nothing to save Apple as far as technical support until we're down here at the June lows. So a bit of a free fall there last week, and yeah, like it could bounce. I don't think you're going to see a move back above 150. So eventually I think the door's wide open here for a flush down towards 130, and just understand the implications. Apple continues to go lower, so does the S&P and the QQQ. And we're not even talking about a brand new low. Right? Just a move down to support. Obviously, you get Apple breaking 130, and we're gunning towards 125, 120. All that does is put more pressure on the market. So, along with the VIX under 30, the dollar under that 21, I think as long as Apple's under 150, we're heading down a little bit lower. So Apple's breaking down, and then you got Tesla here, which we shorted on Friday, and you guys can check out the last video covering that trade. If Tesla takes out 265, there's nothing to save it here until it's like 20% lower at the June lows. So hopefully you guys can understand the importance of these two names. Google and Microsoft are already dead. The COVID stocks like Peloton, they've been dead. The semiconductor stocks, they're dead. And even though the S&Ps and the Qs have already made new lows, two very important stocks got quite a lot of room here until they're back down where we were in June, July. Tesla breaks 265 and then opens up a door for a move down to the lows. Huge problem for the market. Same thing for Apple. So I can basically cut the video off there, guys. I've got nothing I'm interested in getting long. And if we're going to get some kind of short squeeze this week, we need something to sink our teeth into, aside from the fact we're a little bit oversold. So if you're looking for a bounce this week, my advice is anchor to the 15-minute chart of the S&Ps. Don't look for that bounce unless the 15-minute 21 EMA can cross positively back above the 50 SMA. If they can't even do that, we're going to continue to trade lower, or best case scenario, we just trade sideways. When you got problems from the top down, you're not going to reverse unless you start to clean things up from the ground up. So anchor to your 15-minute chart, and the overall game plan on our end, we're short Snowflake, so we're looking for a breakdown in that bad boy. And then we got the call credit spread that we opened on Friday in Tesla. So we're kind of in a good position. Me and the mastery members. If tomorrow's a bloodbath and we gap down, we've got 2 trades open that should pay us pretty nicely. In the event the market pulls out a bit of a Hail Mary here, and we get some sort of 2 to 3 day rally, that gives us a great opportunity to open up some more shorts at better prices. Right? That's kind of like the dilemma right now. I see problems in the monthly chart, I see problems in the weekly chart, I see problems in Tesla, Apple. We got problems from head to toe, but we're so oversold here. It doesn't mean getting short down here doesn't work in the long run. It just means you're not going to lock in the best risk versus reward. So we're in a good spot. If we gap down and die, we got a couple of paychecks coming our way. It'll be a nice start to the month of October. If we do rally a bit, we're looking for shorts on Apple, Amazon, and Tesla. Because I think those are three names that got a little bit of meat on the bones left. But there you have it, guys. Hopefully these things all make sense. And if you want, down in the comments, let me know if you agree or, maybe you see things differently. Maybe there's a few things I'm missing. And in the event I am, do a friend a favor and let me know down there in the comments. But on our end, we are locked and loaded short, and it's either Hail Mary or down goes Frazier, probably in a pretty ugly fashion this week. So either which way, we're here for it. And I hope you guys enjoy the rest of your Sunday. So as always, tomorrow morning, here on the channel, I'll be live at 8:45 a.m. Eastern for some pre-market prep. And then, as always, I'll do about an hour of live trading on Thursday and Friday in the Mastery group. And then we do the Sunday morning weekend prep that we did this morning as well. So you guys can check out the link in the description for the 30-day $7 trial. Otherwise, hope you all found this helpful. Go on ahead and hit the subscribe button if you haven't already. And I will see you guys bright and early tomorrow morning for some pre-market prep. Talk to y'all then.